Good evening, everyone. Here are my takeaways from the Federal Reserve's meeting today and Jerome Powell's press conference. First, the Federal Reserve and Jerome Powell paused interest rates for the second meeting in a row, keeping interest rates at a level between 5.25% and 5.5%. This is the highest level in 22 years. And honestly, I think the markets reacted to this very well because in the press conference, Jerome Powell acknowledged that the economy is a little bit stronger than expected, and that in the face of high interest rates, the Federal Reserve is looking at not only tightening credit conditions, but tightening financial conditions. When they added the word financial conditions, I think the market reacted to that very well. And in the Q&A session in Jerome Powell's speech, Jerome Powell pretty much said that the risks are two-sided to high inflation, also slowing growth from the high interest rates. So I think the markets reacted to that very well. And then on top of that, Bitcoin's reacting very well. Bitcoin just crossed 35,000, partially due to a report from Stanley Druckenmiller criticizing Treasury Secretary Janet Yellen for not refinancing the U.S.'s debt during the low interest rates in 2021, because a lot of homeowners back then took advantage of low interest rates to refinance their mortgage debt, and he thinks that the Treasury Department should have done the same. And I think Bitcoin reacted to that news very well, because economist Mohamed Al-Arian said that Bitcoin is a safe haven asset as investors are looking away to government debt. And I think those two things, between what Mohamed Al-Arian said and Stanley Druckenmiller, combined with the coming spot ETF approvals, and there's more hints that might be coming soon, I think led Bitcoin to rally, as well as stocks in general to rally, and specifically technology stocks. And I think November and December will be pretty strong for the market. We have to see. And additionally, there were two other economic reports that came out today. They were the ADP payroll report that came out a little bit weaker than expected, which is something that the Federal Reserve wants to see. The JOLTS and job opening number was a little bit higher than expected, showing that the labor market and economy is still very strong. And manufacturing came out a little bit weaker than expected. All of this data suggests that the economy is still strong but slowing. And ultimately, I think that's why Jerome Powell said the comments he said in his speech. And there is progress that's being made. And the economy, and the fact that they took the recession off the table, the Federal Reserve taking recession off the table, I think was pretty huge. And all of this, I think, led to the stock market's strong performance today.